So hi guys, it's SJ speaking here, and in today's video we're going to see about Fibonacci retracement and extension. So it's basically a trading tool which is almost available in every trading platform. So personally I use TradingView, so it's also available there. So what is Fibonacci retracement and extension? So it is a pullback strategy. So many pullback traders, retracement traders use these strategies. So breakout traders might also use it for as a reference. So there are two types of trading, basically breakout traders and breakout trading and pullback trading. So breakout traders usually enter here or they enter here, whereas pullback trading the traders enter here or here. So Fibonacci is basically a pullback strategy, so it's a retracement strategy. So it is based upon Fibonacci numbers. So what are Fibonacci numbers? They are a series of numbers where each new number formed is the sum of two preceding numbers. For example, let's take this third number 1. So it is formed by adding these two numbers. 0 plus 1 is equal to 1, and this 2 is formed by adding this 1 plus 2, and this 3 is formed by adding this 1 plus 3, and 5 is added by 2 plus 3, 8 comes by adding 3 plus 5, and 13 is added by formed by adding 5 plus 3. So it goes on. So this is the series. I have brought you an example of these first 20 terms. So it was first used by many Indian mathematicians. So it was basically used by Indian mathematicians, so such as Acharya Pingala, Acharya Veerahanka, and Gopala Hemachandra and Narayana Pandita. So then an Italian mathematician known as Leonardo Bigolo Pisano, he learned this Indian mathematics, and he made it popular in the Western society. So he is also known as Fibonacci. So once after that, these numbers came to be known as Fibonacci numbers. So he was the one who made it popular in the Western society. So what is Fibonacci retracement? It is a tool used in technical analysis which uses these Fibonacci numbers for analyzing stock prices movement. It uses sets of horizontal lines where each line is associated with a percentage based on fib numbers to find the level of retracement or pullback the stock price does. These fib levels is where the stock price usually finds support or resistance. These levels are plotted by using swing highs and swing lows. This is very important, swing highs and swing lows. Every retracement is plotted by using swing highs and swing lows. So this is the structure of the bullish trend. So before going into that, let's learn about this golden ratio. What is the golden ratio? So golden ratio is also known as divine proportion, or also known as God's handprint. So it is derived from the Fibonacci numbers. So Fibonacci golden ratio is usually this is the Fibonacci spiral. You can even Google it and see. This is the Fibonacci spiral. So it is in the ratio of 1.618. So you can find this ratio, golden ratio, in many structures such as sunflowers, so snail shells, even our galaxy structure is in this form. So it is used by nature to maintain balance in the universe. So it is also, so since many structures are in this accept this golden ratio, it is in the form of this ratio. Many tested it in financial markets, share market, so and found it to be valid. So this is a proof that share market runs based upon certain mathematics. So it is a irrational number which is equal to this value, which is approximately equal to 1.618. So you can also see the inverse. Inverse of 1.618 is 0.618. This number is also very important. So so this is how the structure looks like in live. This is the trend, bullish trend. So this is how the structure will look, and this swing low and swing highs are taken, and this is where the stock price get retraced at almost 0.618, which is the inverse of 1.618, which is the golden ratio, and then it goes almost here. This is the target 1, 2, 3, and 4. You can this is basically percentage, but I brought it in the form of numbers here. But this is basically 61.8%, 78.6%, 50%, 0.38.2%, 0.2836. How these numbers are formed is simply by dividing one number by another number. So it's basically divided, formed by dividing newly formed numbers by its immediate preceding numbers. So Not only immediate pricing numbers, you can also use other numbers. For example, 5 divided by 8 gives one value, 8 divided by 21 gives one value, 13 divided by 21 gives some value. So these numbers are found by using that. So that is not important. So basically remember these numbers, these are very important. So basically this I found these numbers, so it will not be in default setting. I will say this in live chart example. So you can see this is the thing. So the stock price will be in this format. So once if the stock price get retraced at 0.618, the market will usually go till 0.618. This is only an assumption. You can't say it's 100% accurate. If it gets retraced at around 0.5, it will go almost 0.414. If it get retraced at 0.32, it will go till 0.272, that is minus 0.272. So this is only an assumption, so it is not always 100% accurate. So this is an example here. You can see that the price gets retraced at around 50%, and then some people use combined candlesticks pattern and take an entry here. They usually take entry here and keep their stop loss here, and the first target is at the minimum this 0, and second target, third target, fourth target. So this is how pullback traders mainly use this. So this is the example. You can take any swing highs and swing lows, not only this swing low and swing high. You can also take this swing low and this swing high, and you can see the retracement levels. So this is an example of it. So you can see clearly here the market, what I said is that if the market retraces at 0.5, it will almost go to 0.414. You can clearly see that the market went till here, even more than that. It touched even the 0.618 levels. So this is how. So this is in the case of bearish trend. It's similar. You can see you should plot by using this any swing high and swing low. You can see this is the golden ratio, and it comes down. So this is the live chart. You can see your entry. People usually place the entry here and stop loss here and targets here, 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 or here. So this is the structure. And then wait. And after that you can see the extension. So extension is also a tool which is used in technical analysis that uses Fibonacci numbers for analyzing stock prices movements. It is almost similar to Fibonacci retracement. The only difference is Fibonacci retracement levels indicate how deep a retracement could be, whereas Fibonacci extension shows where a price will go following a retracement. So I will bring you a live chart. So this is the live chart. So how to use Fibonacci retracement? So you can go here and select the Fibonacci retracement in TradingView platform, or you can press Alt plus F key. You can use any swing high and swing low. So this is the swing low, this is the swing low, this is the swing low, this is the swing low. I'm using this swing low. So this swing low I'm using it, and I am using the swing high here, or you can also use this swing high. I'm using this swing high, and you can see the price gets retraced at around 0.5, that is 50% retracement. Actually this 50% is actually not a real Fibonacci number. It is used nor simply. So but the other numbers are Fibonacci numbers. It is found by dividing some numbers, and this are found. The default setting of the Fibonacci will be like this. So you can so default setting is actually like this. This is how the actual Fibonacci will look. The default setting will look, but this is what I personally customized it. So you can put your what you needed. You can add the minus numbers. How to add a you can simply change the numbers as you want. So you can see this is how the price get retraced. People take entry at here 0.5 level. They wait for a retracement, and they will put the stop loss at around 0.618, or some might use 0.718, and keep the targets accordingly. So this is the target 1, and this is the minimum target, second target, third target, fourth target. So if persons are using it for long term purpose, for example, you can use any swing low. Suppose if you are using this swing low and this swing high, so the price get retraced at 38.2%. So if you are holding it for long term, other than this target 1, 2, 3 and 4, you can use these targets 1.618, 2.618 minus. So these are the values which I personally customized. So how I used it, simply I took the extension level. Extension levels are used to see where the after retracement where will the price go. It is basically used for keeping targets. So I simply compared it with the extension. I compared it with the extension. So it usually forms the, so these ranges are almost similar. By comparing with the extension, I brought these numbers. So you can see, you can take a note of these numbers. So these are the numbers, but actually extension should not be used like this. So simple difference between extension and retracement. Extension should be used like, so you have to take a swing high and swing low, but you should keep that extension starting point at the retracement level. So you can see you should keep it here, and you can see the targets. Your minimum targets in based upon resistance will be this 0.236, and second is this, and third target, and fourth, fifth, sixth, seventh, eighth, ninth. So but if you wanna not keep like this, you can keep three targets. So minimum target at 0.618, and second target at 1, and third target at 1.618. It based upon your risk. So this is what the extension is. Extensions are used like this. You have to take the swing low and swing high and bring the starting point to the retracement level. This is how the extension used. In case of bear market, it's almost similar. You can use this in any kind of asset classes, including forex or stocks, anything. It will work perfectly. So this is the difference between extension and retracement. Usually the stock price will once it comes to the level of 61.8% retracement, it will almost go to here. Once it comes only at 50%, it will almost go to minus 0.414. Once it touches 0.384 and takes a retracement and pull back and goes up again, it will go almost till 0.272. But this is only an assumption, so it is not 100% accurate. So this is how the Fibonacci is used. You can combine this Fibonacci along with support and resistance or the demand and supply zones or candlesticks patterns, and you can take your entry. So in this case, if you take entry after a candlesticks confirmation, you can take an entry here, and you can take your entry here, and you can keep your stop loss around this candle's low if you are taking targets, or you can use the Fibonacci's previous levels, and you can keep your targets accordingly. So in the case of extensions, you can see this is how the extension is done here. So the extension is done here. You can see clearly the levels are same. So this is how. So you can customize it by going to settings and keep your numbers as long as you need it. So basically the numbers are 0.236, 0.382, 0.5, 0.618, 0.786 and minus 0.272. You can keep the extension normally, and you can see 1.272, 1.414, 1.618, and then 2.618, 3.618, 4.236, 236. You can customize and see which levels match these same levels in the Fibonacci retracement, and you can keep your numbers. So but actually the extension have to be used like this. So this is actually, you should use the extension only like this, but only to keep your numbers. To form the numbers, I have kept the extension like this. I hope you get it what I'm saying. So this is how Fibonacci retracement and extensions are used. It is mostly used for pullback pullback traders. So it gives you a good consistent profits if you combine with other strategies and trade it. So hope you guys enjoyed this video. So thanks for watching. Make sure you like my channel, share it and subscribe it, and also press the bell icon all buttons so you get notified for my upcoming videos. So apart from that, if you want to join my trading mentorship course, you can call me by the number in the scrolling below. So I will give you the details. Other than that, if you want to open a Demat account, you can see the video description below, and I have given you the Zerodha link, and you can open your Demat account and start trading today onwards. So thank you guys. Hope you enjoyed this video. So I will see you in my upcoming video. So until then, bye bye. Take care.